Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good afternoon, traders and investors. Welcome to Friday, March 8th edition of Benzinga's Pre-Market Prep. I'm your co-host, Joel Elconin, along with Dennis Dick. We have Chris D. Scarlisa, sitting in for Spencer, who is at a bachelor party in Denver, Colorado. We are going to take a look here at the markets. We got a lot to talk about on today's show. Dennis is just talking about expect the unexpected. We'll talk about a downgrade that went the other way yesterday. We got the jobs number coming up at 8:30. A big turning point in the market was the job numbers, I believe, back a few months last year. We'll talk about the crazy stock that y'all are trading, BTPH. We got earnings from El Poco Loco, Costco, Smith & Wesson, Big Lots, Fizz, and a few other ones this morning. Vail Mountain, Navistar. A lot of ratings to talk about, too, today. GME down at B of A. We'll cover all the ratings. Plus, we'll have a guest here at 8:35 a.m. We will bringing in live from New York City, Rachel Shasha. She's an options trader. SassyOptions.com is her site. And she made a good call on the show a while ago, so I wanted to have her back on and see if she's still working on the children's place. Triple D, it's Jobs Friday. Are you prepared for some volatility today?
Well, we're always prepared for volatility. Are we going to get volatility is the bigger question here. It's been picking up a little bit here the last couple of days, though. Obviously, we have been in, this market's been going straight up here for the better part of 2 months. And the last couple of days, we've been under a little bit of a correction here. I think the bigger question is this turning into something big? And at 8:30, we're going to get a lot more information. Let's see how they respond to this jobs number. You've always got a few nervous Nellies. I mean, it's been a very impressive January and February. So March comes in, and we've had a couple of weekdays on the S&P. We've had a couple of weekdays in the Momos. I think right now it's just healthy profit taking. The question is, does it turn into something bigger? That's still to be determined. People in the chat were asking, and we know I'm underinvested in my portfolio, which, I sold at the right time but didn't buy it back. And if I was to pull back, would I be rebuying stocks? Yes, I would probably be nibbling back in. But I think we got a little bit more work here yet, just if I'm looking at the charts. But let's wait till we get this jobs out of here today, because it's going to be big. The market is going to probably move significantly off this. I probably will leave you guys 8:27 for a few minutes, try to go trade that jobs data. But I don't know. What are your thoughts?
I'm always, crying wolf or, worried about the big ugly bear here. And Chris is going to pull up the daily of the spider here because, I think that this is a really important chart. You don't get a lot of formations like this. When you go to the daily chart here, what you see in the spider, and I probably have said this 150 times, you had some highs in October, just around 2,800 in the SPOOs, 280 in the spider. You did it again in November. You did it again in December, right? Then you have the big decline, and you come all the way back up to this area of resistance. So I'm sticking with 2,800. I did get a lunch bet off with Jeremy when we were at 27.90. I took 27.40. He had 28.40. So I cashed in on that one yesterday. I was not able to get you on anything, but I just think we're more of a trading range where, 2,300, 2,400 up to 2,800 than we are just blasting off going to all-time highs here. So now we're back in the retracement mode.
It makes sense. It makes sense that we would stall out the same area we stalled out in November, December. I mean, why were we going to blow right through there? So it kind of makes sense. And even on the technicals, we know how they like to buy breakouts. You had that little head sneaking above on March the 4th where people get excited. And it's like, okay, that's the good candle. And then the reversal that day. I mean, and then we were up big that morning. I remember that morning 4 days ago. So, this is the way the market does. It tries to sucker in as many people as possible, and it gives you the big update, makes you think we're breaking out. We're going to take out those highs from November, December, and then turns around on a dime and doesn't really give you that much of a chance to get back out because we've been pretty much straight down ever since. So that's the way it works. It's fading the crowd. and we've had Gil Morales on here multiple times, and he's been saying the best play has been to fade the breakouts because they don't seem to work. It's more like the buy the dip mentality where he's looking at breakdowns that fail too. So he's like selling breakouts and buying breakdowns, and to a certain extent, like when it sets up well. And I agree with that. I mean, it's not whatever is in your textbook and tells you these are textbook setups, when it's very clearly a textbook setup, which it kind of looked pretty good when we just go back to March the 4th that morning, often it goes the other way. And this is a funny market too. It's punishing the crowd to a certain extent, and it's been tricky March. And I'm back in the zone. I've been doing pretty good because I've been getting a little bit of luck too. But Toll Brothers here yesterday, very interesting. The stock gets downgraded to underperform by JP Morgan in the morning. It's trading down in the pre-market, and then just kind of starts to show life. And it ends up opening. And just from the previous date, opens 34.75. So, and it was closed 34.82. So basically opens flat and goes straight up. It was kind of giving you a tell though in the morning on that one, Joel. Like it was kind of like we were even talking on the show. It's like Toll's trading up, but it is downgrade. I was even rechecking it. So, it wanted to go higher in the pre-market to a certain extent and opened flat and then went straight up. So sometimes the pre-market can give you pretty good tells. And so in some cases, you see a stock get downgraded. It doesn't always mean it's going to go down all day.
No, it doesn't. And that is interesting because I've talked about this with Spice and some other traders, and it's an anomaly. I mean, these firms are pretty influential, right? They make a call. But I think what the lesson to be derived from this is, these Wall Street weightings do affect the issues, but you got to have your own plan. And if you were looking at Toll Brothers, the two previous days lows were just under 35, 34.99 and 34.65 in this decimal laden world. That's not quite, exact double bottom. Opened up 34.75, boom, ticked a couple pennies lower, and it was off to the races. So as you mentioned, expect the unexpected. You said on the pre-market show that if these upgrades are, if they're going to start going, upgrades are going to go down and downgrades are going to go up. It's going to be.
I mean, they start doing that, and it'll be really. And they're not going to start doing that. You're not going to see all of a sudden, everybody's fading everything. But you do often see reversals happen on a big downgrade. So often in the morning, usually you can pretty much, if stock gets downgrade overnight, usually it's going to open down. 98% of the time, probably. Maybe I'm high with that number, but significant amount of time it's going up and down if there's no other news on it. So, but we've seen lots of days where stocks reverse and then they start to catch a bed. JV Spec and making a good point in the chat though. HOV, one of your home builders, did have earnings yesterday too. So maybe that probably helped the whole sector to a certain extent because it wasn't just Toll Brothers that rallied. DHI was up. Lennar had a really good day yesterday. LEN, full disclosure, I do have a small day trade on in Lennar right now. But I mean, you just look at these and you've got to be prepared always. Just because, analyst does something doesn't mean, it's going to necessarily trade in a certain direction. You've still got to have a contingency plan. You still got to have an out whenever you put a trade on, I'm going to say, especially with trading. Investing is a little bit different animal, but with trading, you've got to know where your out is really when you enter the trade.
And I just going back before we start to break down the earnings, I just wanted to reiterate, and I was slow to bring this up to the chat, the rollover. You had a very early rollover, right? Because your quad witch is next Friday. So you had the rollover, the contracts on Wednesday. So if you're long the March, you got to sell the March and buy the June. Vice versa. If you're short the March, you got to buy the March and sell the June. So what that does is it spreads, you could say it's double liquidity, but that spread is very important. You don't want to give up a whole lot getting into that. So what happens is it kind of creates these little vacuums in the markets as all the volume switches over from the March contract. Now I stick with the March numbers. I will stick until Friday because you still got pretty good volume in the March. But just remember, it's a short month. You got a triple witch 1 week from today. And there's usually, and I probably have mentioned this before, I had some of my buddies on the floor that would not trade the rollover. They would not even come in on that Wednesday. Yeah, Wednesday, Thursday, and maybe they would come back on the Friday, but just because of the gaps in the market. But anyways, that's a macro. If you're looking for support in the S&Ps, I'm still doing March numbers. We are below Thursday's low. On the March, on the downside, I have 27.29. That represents your February 15th low. And then you got a pair of lows closer to 2,600 from the 11th and 12th. So not a lot of support in there. That doesn't mean that, we won't stop at intermediate numbers in the meantime, but trading down 14 and a half handles. So even if we get a rally off this number, I think you could find in some overhead supply. But before we go to the earnings, let's talk about Dennis's favorite stock that he's been trading. I think he traded 100,000 in BTPH yesterday. Is that correct, Dennis?
Yeah, no. This stuff's above my pay grade. And I'm going to say it. I say this on the show every time we talk about these small flyers. And I know they're exciting. They're fun to watch. They're fun to talk about too. So I don't mind talking about them. And if you got a niche and you're good at trading these things, continue to trade them by all means. But if you're just starting out, and it seems like, it's natural human tendency to want to go where you can make the money fast, where you can get rich fast. I tell you, this is where you can go broke fast there too. These stocks are the hardest ones to trade. They're wild. It's hard to control the risk. The spreads on this thing, BPTH, we're talking Biopath Holdings. Spreads will be $1 wide, $2 wide at times. I mean, these stocks are very difficult to trade. I rarely trade these things. If maybe early, if you're thinking, okay, well, it's starting to look good, like it's breaking out, I might try it. But when they start going parabolic, it's just very difficult to call where they're going, on an intraday basis anyway. So, long term, this BPTH, I think, and I always say this, long term, it's probably going to be back at $4 or $5. So don't get stuck with this one. These things go parabolic and then eventually they come back down to earth 2 months later. But we don't know what the path is to get there. And if you just short these things at like 20, saying this is ridiculous, the things at 70 in your face, you get margin calls, you could have locate issues, could be all kinds of different problems there. So you can't just say, okay, yeah, it's going back to 2, I'm going to short it here and I'll be fine, because you may not be able to take the pain in between. Or you may not be allowed to take the pain in between in the case that your broker can't locate the stock for you, and all of a sudden you've got to get bought in.
And also, I mean, you could be a very good trader, at this market, but all you need is like one halt, That's
what happened. Yeah, it can halt.
Yeah.
And then all of a sudden, some bad news comes out and boom, the stock could be down at $3 or $4 or $5 on you again. You've got to be very, very cautious trading this stuff. But I mean, people like trading these kind of things because you can make money in a hurry, and nobody likes to get rich slow. But something Kramer says, and something I completely agree with, is it's the safest way. I mean, I trade boring stocks. I trade General Electric. I talk about on the show Coca-Cola, Johnson & Johnson, Bank America. I trade all those because they have correlations, with, their respective ETFs, with their respective market. This is no correlation to anything. So this can just go anywhere. Big buyer comes in, boom, 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 it's going up, goes to $73 yesterday from 20. Yeah, it's exciting to, talk about on the show, and it's exciting. And if you made a good trade on, congratulations. But, for the most part, when you're trading this kind of stuff, it just feels like gambling to me.
Yeah. And I don't know. This one was kind of weird. I was talking about this with the Brentster, because usually things happen like in successive days. But the memo got out on the 27th here. The volume bumped up to 1.3 million. And then it had the big day on March 1st, where it went from 260 to 772. And that was 59 million. So that the memo was really out. But if you bought that day, man, you watched it go $3 against you as it went back down to 462. And then the super volume came in on, Wednesday, when it went to 1202. Yesterday was the big day, 36 million, went up to 3886. So usually the volume, big day, big day, big day, big day. But this one had a little bit of a breather in between. People are telling us it's hard to get a locate on this or to buy puts.
Yeah, and that's why when you see these things explode, there's nobody that can short, nobody can keep it in check. And if there was anybody, that did have it, maybe, the locate goes tough, and then buy-ins start happening, things are liquid. Believe it or not, some of these things, and I'm not saying it wasn't in this case, but in some cases, you see some smaller stocks that, very low float issues that all of a sudden start taking off. Sometimes those are started with buy-ins. that, the stock, maybe was a few people short the thing, and all of a sudden, they can't get short because whatever institution they were borrowing from maybe sold stock. So, you get 2-day settlement there and the broker can't locate it and they buy you in. I've seen that happen in little low float preferred stocks where they explode and you're like, what's going on? We saw it happen with Viacom. VIA versus VIAB when the spread blew out 10 points there. Remember that like a couple years ago? VIA is like going up every day and VIAB wasn't going nothing. There was no news. It was a simple fact that the VIA locate, for whatever reason, couldn't get located. So stock exploded on buy-ins because the brokers will literally, if you're short a stock and you've got the locate, and all of a sudden, a couple days go by and the broker all of a sudden can't get the locate, they give you a warning. They send you a warning message and say, look, we got a failed locate here. We're, you have like, it could usually interactive brokers, for instance, just, to use a retail example, you get a pop-up message at like 3:50 and it says, you will be bought in at the close if, we can't locate this, because they have to stay in compliance because the broker has risk on that. They can't, be allowing you to short stocks that don't have a locate on. So they give you like a 10-minute warning and say, look, buy in the next 10 minutes or we're buying you in. And they go literally, if you don't, they go into your account and they buy you in at the close. They just lift whatever offer is there. If there's no offers there and the stock's trading at $20, they'll lift a $30 offer. They'll do whatever they can. That's the risk in the real low float stuff. So a lot of times, and I'm not saying that was in this case, I'm not following the story, but sometimes these things are just flat out, buy-ins from brokers that they have to buy the stock.
All right, let's move on to earnings, Dennis, and tell me if you don't really care about the stock. Apollo Loco.
I like that stock.
Okay.
I trade that every once in a while.
Okay.
I still like it from Breaking Bad. It reminds me, whenever I see this El Polo Loco, the LOCO, and if anybody watched Breaking Bad, did you watch Breaking Bad, Joel?
No.
They had that. That was in Breaking Bad. The one main bad guy was doing all his drugs, and we're not. Obviously, it's not the case here with El Polo Loco, but it was from a company. I gotta just look up the name of that. Breaking Bad. The chicken company's name or the restaurant name. It was Los Polos Hermanos. So, and the villain in this was awesome. The Breaking Bad is just maybe one of the best series that was ever out there. Unbelievable series. Anyways, I always think I see El Polo Loco, I think of that, and Los Polos Hermanos was the one from Breaking Bad. So I kind of got a liking for that just because of that.
Did I tell you I finished House of Cards? It's like I couldn't even figure it. Like the last couple of episodes, I almost had to watch it. It was just
apart,
I know.
Don't give it away because somebody may be still watching it, but we've said on this show it's not worth watching the last season. Such an awesome show, and they lost Kevin Spacey obviously, and they didn't know how to fix it, and so disappointed in the ending of that. I'm so disappointed in the final series of that, season of that, but whatever. What'd you think?
I thought it was horrible. I don't know how we went from. I know how we got on this.
We're talking Breaking Bad.
Okay.
Let's start talking good Netflix series.
All right. They had a 2-cent beat. Street estimates were at 14 cents. They came in at 16 cents. A little better on the revenue. The street was looking for 104.4 million. They came in at 106.26 million. Trading down 15 cents here. You had a little bit of a dip down to 14.40. Then the rebound. I guess I'll use that 14.40 level. I see a 14.31 low. So there's your support. You bounced 60 cents off that. On the upside, man, I just see a wall here at 15.30. So there's my trading range of, if it's a volatile day, let's call it 14.50 to 15.30.
Also reporting earnings. Let's go to the big one from last night. That is Costco, COST. I was actually at that store a couple days ago. Wasn't as busy as it always is, but I went at an oddball time. It was still busy. I mean, it's still like you try to fight for a parking spot in that lot. But anyway, COST, nice lift here. Joel, you got the earnings in front of you?
I sure do. That was a huge beat. I wonder if there was anything else baked into this report, because street estimates stood at $1.69. They came in at 201.
I think that's a flat out. That's a clean number. So that's just a huge beat.
Really beat. Wow, man. And then on the revenues, a little bit of a revenue miss here. Street was looking for 35.68 billion. They came in at 35.396 billion. So they're kind of shrugging that off here. I'll just talk about the pre-market trading. Really nothing special to look at here, except for the fact that you gapped up and you made a high at 228.50, and now you've backed off to 226.50, and that's way, way above the high from yesterday. So keep an eye on the 28.50. You're filling a gap here. Really no relevant numbers except till you get closer to 230. I don't know if you're going to have the gas to get
I'd
to
say
that.
the same.
Yep, pair of highs, 229.62, 230.45. This just called 230 if, in fact, you could take out that pre-market high. But nice report for Costco, kind of quiet ahead of the report. But, you got to love that grilled onion grinder, that they have that you could put on the hot dogs there. I mean, that is worth buying the stock on its own. And
well, it's the what is it? The $1 hot dogs that they charge there? Is it $1 the hot dog? How much is the hot? Or it's 50 cents?
Oh, I don't think it's 50 cents. Is it $1?
It's cheap. I think it's $1.
Yeah, and
it's cheap. My buddy makes a great point. He's like, they're so smart with that like $1 hot dog, because here you are, you go in Costco, you drop like $300, and then you buy the $1 hot dog at the end of it, and you feel good about yourself. They got a deal, so they make you buy something. They put $300 worth of stuff, and you feel good. Smart company.
We're making our list, and we'll be going this weekend. Marvel Technologies are reported to here.
Yeah.
And
wild ride for a lot of the semis because of this too, but give us the numbers.
Okay, here's the report from Benzinga Pro. They were looking for a penny loss, but they had a 15. No, I'm sorry, that's not Marvel. Why is that not coming up? Earnings, MRVL.
It was guidance that was disappointing. If you don't have it, I can go grab it there too. I had it in front of me a minute ago. I can go and grab it.
Yeah.
But anyways, it got hit down to lower 18s. It has rallied off of those lows, MRVL. I'm just trying to grab the numbers there too. So adjusted basis 25 versus 26.
Yep.
So it's a slight miss on the bottom line. And then they see, and here's where it really got hit too. They see Q1 12 cents to 16 cents, and analysts estimates were up at 23 cents. So the guidance was light. So, and the revenue came in 745 million. And the numbers were right in that ballpark. So the revenue is around, but the guidance is light for the first quarter earnings, and that's why the stock is taking a hit and was taking a hit last night, although it is off its lows.
Yeah.
And Western Digital, it's been a couple bad days for these semis. Western Digital got hit pretty hard on this number, but pretty hard in the last couple days. And somebody was asking me a couple days ago, and I'm still long this thing, half my position, and it was trading up around $51, and I was like, I'm holding on to it. I guess I should have sold it because now it doesn't look nearly as good in the chart. So I think on rallies here, the semis are actually sells.
Marvel Technology here, the initial dip took you to a nice number. We talk about whole and half numbers. Well, your initial dip took you to 18 even here. That's your pre-market low. And man, I'm just going to have to call that pretty good support. I know we're 60 cents above it here, but a pair of lows at 17.95, 17.98. This was back in early February, and you have more lows just under $18 between 17.77 and 17.90. I just see, opening, well, we didn't open to the support, but I would have said first dip down to 18's a buy. We'll see if we can get it back down there again during the regular session where you see some more liquidity. If you're looking for a gap fill on this one, kind of weak on the close. Yesterday's low 1907, the close 1917. So I don't know. Good pop. You might see 19. Big decline. Look for that support at $18. Let's
go to one of your favorites, Joel. Fizz. It reported last night, disappointing big time, catching a downgrade from Guggenheim here this morning as well. This is going to be your loser of the day. And you know what? It took a long time, but the stock is finally fizzed out. The feature of the pun.
You did. And I caught this one just when I had all these big candles on the monthly back in late 17. Should have done some leap puts on this one. But anyways,
it can stay. It seemed crazy that it had such a move and it was hot for so long. Like 20. I remember us talking about it, and we were dogging it at 80, 90, 100, and we were wrong. Kept going up, 110, 120. Then it came back in and looked beginning 2018. Okay, well, this is the beginning of the end. Now I gave you one more shot and got back up to that 127, 125 area. And now it's turned, and obviously now it's got problems. So if you go a long-term chart here, I mean, you know, this is a stock that came from $20 back in 2015. So just because it's at 55 doesn't mean it can't go lower.
And what was did the CEO come out and have some kind of controversy about his stock? I can remember, and everyone got all all upset with him. I can't remember exactly what it was, but there's some volume trading here. We're just trading off the lows of the pre-market session. That's 54 even. Trading at 55.41. I mean, oh my gosh, on the monthlies here. On monthlies aren't going to help you out because your next monthly support level. Well, you had a monthly low at 54.13. If you want to lean on that low from March of 2017, it's a soft number here. I'm sure a lot of people will be taking this one out. I think if I had a nice short position here, I'd see if I could get hit at 55, 54 and a half, 54, you know, just layer it down with bigger size, you know, until they run from your bid. But boy, oh boy, this stock, it had its run, and just shows you, man, you just got to be able, you know, stuff like this, you know, you just got to look longer term because it has these moves. And that breakdown to 80, you thought it was dead. Then it went right.
Yeah, nothing goes straight down. Even when you get the call right, sometimes it's a matter of can you take all the heat in between it. So, I mean, in the long term, we ended up being right on this, but there's no way we would have taken all that heat if we were trading it. So, you know, I can't be too early on the trades there either. These things can stay hot for a long time.
All right, I just want to add a couple things here, Dennis, and then the crude's taking a hit today. We could look at that versus the USO.
Yeah, getting hit hard here. What are your thoughts here? Let's just check out the chart of crude here and look at this because we've tried to sneak, you know, if you're just looking at the USO, we tried to sneak above 12 multiple times and keep getting rejected. And now it looks like we're at the point of we might be failing. We've had a hell of a rally from, you know, the lows when we got down on the USO to 965, and you can do the corresponding levels in the CL if you want there, Joel. But I mean, it looks like we're kind of failing.
Trading range, Don. It's been in a trading range. If you throw out that 54.63 low on the 15th, you've been in a trading range from 55 even up to 57.5 area. Just bouncing in between those areas. So I think once you get a move out of this area below 55 or above 57. But Dennis, it is 8:27 and 30 seconds. I want you to go wide here on your markets. We have the job.
I am going to go trade here. Joel's got a lot of other earnings and go through big lots. And, well, actually, there's not a lot. AOBC, I want you to hear that one too. And OKTA, that'd be a good one there too. But maybe Brentster. Can Brentster preview the number for us?
Yeah, we're live in the office.
Good morning. What's up, Dennis?
Hey, Brentster. I want to say hi to you, but then I got to go trade. So
good luck.
Maybe I can talk to you after. But
cool. No problem.
Nice to hear your voice, Brent.
Right back at you. Hello, pre-market prep viewers out there. So we got unemployment rate, 3.9% is the expectation. Reminder that in January, the unemployment rate was 4%. So looking for a little tick lower there. We're going to have non-farm payrolls expected 181,000. Remember, our prior reading for January was a big reading at 304,000. Remember that there will be some revisions to those January and actually those December numbers. For the private sector, we're expecting a reading of 170,000 jobs added.
Yeah, and well, just first you that aren't familiar, Brent Slava is head of the Benzinga Pro News Desk. He keeps a tab on all the information coming out on Wall Street. He also helps me with my writing and coming up with synonyms and stuff.
Not a lot of people can help you with your writing, Joel.
I know it's beyond being helped here.
I'm just joking.
But the Brentster here, we're going to keep an eye. We have about 50 seconds here to the number, hanging out near the lows of the pre-market session. That low is 34.75, currently trading at 37.25. Mid-range on the session, if we get a pop here, 48.5, but we'll forget about that because that's the June there. That is not mid-range on the session. Mid-range comes in at 43.25. The close in the pre-market high, your close is 27.50. Your pre-market high right there, 27.51.50. We'll see here if we could get it to go green
about
here.
About 10 seconds here, Joel.
10. Okay. Live
And I'm going to read the non-farm number first. So I'm just going to call the number out. I won't say it. We're going to have the non-farm number first, and I'll read the private sector, and then I'll go for the unemployment rate.
We couldn't get Eamon Javers, so we got
non-farm number coming in at whoa 20,000.
No way.
20,000 is the reading for the non-farm number. We're going to have a private sector number. 25,000 jobs added. The expectation, ladies and gentlemen, was for 170,000 jobs to be added. Let's see what the unemployment rate is here. The unemployment rate is ticking lower. That's a silver lining there. 3.8% on the unemployment rate, ticking lower from 4% and better than the 3.9% expectation. So let me just read those numbers off to you again one more time, ladies and gentlemen. Non-farm payrolls coming in at just 20,000 jobs added. Economists were expecting a reading of 181,000. Private sector numbers 25,000. That's 25 versus an expectation 170,000. And then, as I said, the bit of a bright spot in this report, unemployment rate is ticking just slightly lower from 4% in January to 3.8% for February.
Did we have any revisions?
We had the revisions. Let me get those for you real quick here. So we had that. This is good here. So we had some strong revisions. So for January, the non-farm number was revised higher from a previous 304,000 to 311,000. For the private sector, the January reading also revised higher. We had first coming at 296,000. Now we're at 308,000 for that was January private sector figures.
Okay. All right. So we're in a full-blown recession again, right? Thank you. Right?
You said it, not me, Joel.
Okay. All right. I mean, that's the way the streets can interpret it here.
What's the market doing, Joel? I've got my chart up.
Spoons are getting crushed here.
How much should we fall right there?
We just dropped about 10 handles and not really showing any sign. Great job, Brent. Thanks a lot for bringing us that. That live report from the U.S. Labor Department. Did they call you first and then they give it to CNBC, or did they just get it at the same time? All right. I'm not going to give up on my 2729 number just as of yet. That was your February 15th low. We did get to 2726, not showing much of a bounce yet here. So what you have is you just have a situation here where people are worried about the economy again. And so the Fed backed off, raising the interest rates here. Now you got to figure the Fed probably has this data looking a little bit forward. Our chat is making, some good points here. A lagging indicator from Aviator 1, as you don't know what the next month's revisions are going to be. Spinner is also making the comment that you had the government shutdown during that period. Jimmy A points out the good news that Canada added 55,900 jobs, if that number comes out simultaneously. But, at least you look at it here and, here we are. People are worried about the strength of the economy again. Once again, I just month-to-month numbers, I don't know how much stock you could put in them, especially with the revisions that you get out of our government. We are trying to get back over 2730 here, currently trading 2730 and a quarter. The mid-range on the session now, boy, that drops down to 30. Where is my mid-range on the session? 38.75. So call 27.39. We're looking for a pop. Also, what I'd like to keep an eye on numbers like this is where were the spoos trading before the number came out? And that was right around 27.37. So you dropped. You're still 5 points above that. We'll see if we can get that over in their regular session. So what we're going to do here is we're going to take a little break from our regularly scheduled programming. Triple D, I'm sure, is in a fast market there. So we're going to take a quick break, and we're going to dial up Rachel Shasha. And Rachel's been on our show quite a few times over the years. She's an options trader. SassyOptions.com is her site. So quick break with Chris, and we'll be back with Rachel. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Elconin, along with Dennis Dick, Christopher Dear Scalisi, better known as Dyer Scalisi, better known as Chris in the D here, our assistant producer, filling in for Mr. Spencer Israel, who's at a bachelor party in Denver, Colorado. No comments from the chat here. Rachel, how you doing today?
I'm good. How are you?
We're doing good. Thanks for coming on the show today. Before we get to the stocks that you're following and made some good calls on, we like to ask different traders, investors, about their routine in the markets. Like after the close, are you just shutting things down and you're heading, doing things, shopping, errands? Do you like to file? Do you do your analysis after the market? Or you like to take a break and then get up super early in the morning and do your analysis? Just tell us about your post-market prep and your pre-market prep.
Post-market, I'm usually, that's it. Once the market's done, I'm done. Like I take a break and I just kind of like let my brain relax for a bit. So I guess I would say I do most of my stuff in the morning, looking at charts and whatnot and levels in the morning.
And you like to work out?
And open interest, of course. I do open interest too. Like I look at the open interest all the time. Yeah, and I like to work out. So my morning routine involves working out from Monday through Friday.
Okay.
Before the market opens.
Not on the weekends though.
Yeah. Saturday. Yeah, Saturday I do work out, and Saturday I also do like open interest and charting work. And then Sunday I don't do anything.
Yeah, it's not a day of rest there. Okay. We talked about Children's Place last week, and I can't remember what show we had you on. I think it was the last time you were on. You just kind of had I would call it a vendetta short on against Children's Place. And that was a while ago. And I just wondered, did you use shorter term options and just keep rolling them? Or did you use the stock so you just could hold on to it? How did you approach it? And were you able finally to cash in on that big down day?
So I like to pick a couple stocks that I like to just have like you said, vendetta shorts. It's not even like really anything against them. It's just more fun for me. Just to like have it on. I don't ever use options for those because it's one of those things where I'm just gonna let it play out. I'm not even gonna watch it. Like I'm not stopping out. I'm just holding on for dear life. I mean, look, if it got bought out or something, I can get screwed, but, if it's a premium, but for the most part, I'm just like, all right, I'm going to hold. So Place was my thing, this last round. And I just been holding on to it. It went against me for a while. And I just, I would look at it like once a week and I was like, well, okay, it'll have its day. And then, yeah, I'm still actually holding it. I don't plan on, I think it's still going to go a lot lower. So I do think eventually it will probably get bought out, but I don't think at this price, and I don't think even if it wasn't this price, it would be at a premium. So I could be wrong, but I'm just holding on. I think it still has lower to go. I don't see the appeal of it, to be honest.
Did you have to roll the position at all, or was it something that you
No, because it's just stock. I'm not doing.
Oh, you went to stock. Good. Okay.
Yeah.
All right. And I know you were recently married, but do you have any children?
I do. I have a child. I have a baby.
Okay. How old?
So 6 months. 6 months.
Okay. So was it shopping and doing this stuff? Is this where you kind of came up with this?
No.
No?
Before I even got pregnant, I was like into shorting Children's Place. I had one by my apartment, like where I lived in Union Square, and I would just walk by all the time. It was empty. So then I just was like, so random. And so I just decided to like look into it a little bit more. And I was like, this is garbage. I was like, you can get, and now that I am a mother and like buying clothes for my baby, I actually think it's even more garbage. I just think that it's too much competition for it. It's like, yeah, they're cheap and whatever, but now people are going on Amazon and just like ordering, whatever, like cheap things from China. You don't need Children's Place. I mean, I'm not saying it's like going to go out of business. I just don't think that, I don't think it like should have the premium it does.
Yeah. A lot of competition in the space. Also, they're in malls, right? Maybe not in New York City, but the mall, mall space is very expensive. And the other thing, which you're probably realizing, is that when you go out and spend money for a newborn or a 1-year-old, it doesn't last very long, right?
Right.
They're
no, not at all.
Yep. Yep. So better off with like Dennis going to garage sales and big lots and place like that. But
I mean, for my case, like I basically everything my son wears is from both my previous nephews. So
there you go.
And like I have a lot of friends too that they're like, oh yeah, I just like there's this whole like Upper East Side mom group where they'll like sell bags of clothes for like, under one. So like my friend's like, yeah, I just bought like a whole bag of clothes from like this other mother.
Okay. Well, Children's Place, we talked about that. So did you didn't use that big down day to cover anything at all? You did?
Nope.
No.
Nope. You had me right.
Did you look into the balance sheet or the fundamentals or analyst ratings?
Yeah, I looked at some of the fundamentals, not the analyst ratings or anything. I'm my own analyst in my head. I mean, maybe I'm wrong, but in my head, I'm my own analyst.
Okay. All right. We haven't had you on since the big drop in December. Nice rally up. Just call it 2,800 in the S&Ps. You had to be patient up there shorting and hung out there for quite some time here. Any just overall market thoughts here? We're getting hit today off that punk unemployment number. Any takes on the overall market?
I have to say, and I definitely, I'm just going to preface it with, I could be 100% wrong. I think we see 2,800 again before we see 2,700, even sitting right here with futures at 27.35.
Okay.
I think that next week's March OPEX tends to be bullish. I think there's a lot of delta involved right now with it. There's like a lot of in the money delta. And my take right now is that it's going to go back up. I do think after March OPEX, though, we could be headed back down. So that's my view as of now. I mean, obviously, no one can predict the market, but that's what I'm seeing.
You know what? That would be, when you go with expirations, we have an early triple witch because the first Friday of the month was March 1st. And we've been talking about it on the show and earlier in the week, during these rollovers and into these triple and quad witches, man, you see a lot of funky stuff. So if that would be totally logical for everyone to get all scared here. 2,800, we're going to 2,700. We hit our short-term top. CNBC gets all bearish on us. And then you get a Trump tweet about a deal or no deal. And then you go back up. So what are you looking for on something like that? For me, it's always I like the daily highs and lows, but if we do settle in here, we haven't had the high of the move was, and I'm going basis, the March here was 28.1975. So I don't know if 26 or whatever the low is going to be the day, but for me, I would look at the 50% retracement on the rebound. What do you use when, you're looking, you spot something like this and you're looking for a counter trend move? Do you focus on daily highs and lows? Is there any Fibonacci retracements or 50% retracement that you like to focus on?
I look at highs and lows or days and lows, so just where price has kind of been attracted to for a long time. So where price had sat for a long time. I look at, gap fills. I think that it's definitely possible that we head back down to 27.11, which is a gap fill before we go back up. But so I'm not saying it's going to shoot back up from this level necessarily. But I do think that we stay above 2,700. I mean, give or take a point, whatever, and then go back to 2,800 and a little bit above it.
Shake and bake. And is there any other vendetta shorts you have out there? I kind of coined that term for you, huh? Is there any others?
Yeah, no, I like it. Not at the moment. No. I'm working on one though, but not yet.
You're not ready to reveal it yet? How about
yeah, not yet.
How about any favorite longs here on this dip? Is there anything that you kind of been hoping to get into but haven't got the price yet, or still waiting?
I kind of like that XLNX one.
Xilinx?
Okay. Longer term, yeah.
Okay. So we'll see what kind of pullback. That's kind of holding in there pretty close to its all-time high. So, all right, Rachel. Well, I'm really glad that we got you on here and to talk about that short. I'm glad that you got it. You're sticking with it. It's always a pleasure to have you on Benzinga's Pre-Market Prep Show. We'll talk to you again soon.
Thanks. Yeah.
Okay. S&Ps just hanging here. We did get a little bounce off that low. Still 4 points off the low. Current low stands at 27.26. I'm talking basis, the March contract here, 27.30 is your last.
He'll listen to me eventually here, but he's on mute and he doesn't realize he's on mute. So the old mute trick. Joel, what's going on?
Okay. Am I back?
You're back.
Okay.
What happened?
Okay. Do you want the truth?
I was talking. I don't know if they heard me.
No. This just.
I think they did. I think you were just mute yourself.
No, it wasn't. I'm not going to let you pick on me today.
It said you were on mute.
Chris, where did it say I was on mute?
On my Skype,
Chris ended the call. Chris ended the call.
Okay.
We're
back.
Okay. We're back. And they said we heard Joel. So you heard me speaking here. 27.26, folks. That was an intraday low from February 12th. More significant since your pre-market low. Not much under there. I just have to tell you, not much under there until we get into, I put 2,600, but it's the lower 2,700s. All right, so let's
talk this jobs for a bit. You had some significant movement here since 8:30. Obviously, we lost, 7 or 8 S&P handles additionally. We'd come off those lows a little bit there, but banks are getting the beats. Bank of America is down 1.7%. Citigroup's down 1.58%. Goldman Sachs trading down 1%. It never moves as much as the other ones. Bank of America always seems to be the most volatile. Morgan Stanley down over 1%. Wells Fargo's down over 1%. It's a bank shellacking here, at least in the pre-market. The charts on these stocks don't look that great either. I mean, they started to roll over. I mean, kind of everything is trading again together to a certain extent. I mean, you are seeing rotation of value stuff, but what is risk is you're still seeing a lot of stocks move together, and S&Ps and the bank charts kind of look similar. I mean, if Bank of America, and it's going to have a big test here today, it needs to hold those lows from the move, which is 27.86 and 27.90 back on February 7th and 8th. Because you start getting below that, then you get into a gap area. So if you're a bull, you need to see that 28 hold in Bank of America, that whole level. Because this thing starts getting down to 27.70, 27.60. It could be under 27 in a hurry.
Yeah. Okay. I noticed that got hit. The other banks are getting hit. I mean, that was a bad number. But what is it? Is it the government shutdown? Are they going to come up with another revision? I mean, or if you want to look at things, the other way. Maybe there'll be no more interest rate hikes. And
if you look at it that way, that's maybe why you're seeing 2 themes happen here actually this morning. You are definitely seeing the theme where the banks get hit because we know the banks want higher interest rates. But you're also seeing home builders starting to show life yesterday ahead of this number, showing a little bit more life here again. Not that they are, showing, huge strength here yet, but Lennar just a tick green. You could go like DHI and a couple of these other home builders showing some life. And we know, ground zero for higher interest rates is always, you can look at home builders. And if interest rates are going higher, it's never good for home builders. So home builders showing some life yesterday ahead of this number and not getting hit here this morning makes me think that, not that anybody knew the number ahead of time, but whoever was buying home builders yesterday is looking pretty smart, at least, off this number.
Rotation,
Oh, it
rotation, right?
It is. You've just got so much rotation in this market. TLT catching a bid, gold catching a bid. Market's going to play defense here. So obviously some of your more defensive issues could be strong. I mean, if you look at the XLU, it is tick green now as well. So market's going to play a little bit of defense here. Let's talk gold and silver because gold had been having a pretty rough month. Or I'm saying since mid-February when it topped out. And if you look at the GLD at 127, we're getting some life here this morning. So the defense trade is fully on here, at least this morning. What are your thoughts? Is this time to go nibbling in some precious metals? Silver was really looking ugly as, even as of yesterday still being up over 15 and then the lower 14s, but getting a bounce here this morning off this number.
I think that you had a shot over the last couple of days. I'm just going to look at the gold contract here. I was looking at it had 3 lows, right? At 1283 area. So I was looking at it like, okay, I'm going to lean on that area. Didn't put anything on. And then when we went to 1280 yesterday, I thought, okay, well, that support is no longer valid. It was pretty weak analysis there. But that support, 4 lows in the same area. So swing trade in gold, I'd be stopping out under 1280 and see if we can work our way back into the 1300 handle. So gold getting a nice pop on this as the S&Ps continue to roll over. Looking at the silver market, up 17.5 cents. I have gotten away with a few times when I missed out on the gold move, just kind of hopping on the laggard silver.
It does lag.
Yeah, it does. And, so there's a potential. It's not up as much. You got the same setup that you did before in the gold market, all these lows around 1505, 1506. You shook everybody out yesterday when you went to 14.985, and now you're back above 15. Looking for next resistance here, 1529.5. In the silver market. So it's kind of not an overheating economy and inflation, which usually moves gold. But once again, just another factor of some rotation here. But gold getting a nice boost off that number.
Interest rates are going to be the talk here for the next few days. So not just today, it's going to be the talk here all day today, obviously, with these numbers coming up from the jobs number. And is there, any potential for, the rate hikes or potential to come off the table? You got Jerome Powell going to be on 60 Minutes here on the weekend too. And what's he going to say there? That's a question too. It's rare to get a Fed, chair to go on 60 Minutes. I don't even know if I can remember it ever happening before. So it's going to be interesting, what he says on 60 Minutes and giving his interest rate outlook here.
Yeah, that is.
That's going to move the markets on Monday. So be prepared. Just saying, if you are coming in, and you want to be, you're nervous about this, you may want to consider being hedged coming into Monday, because you're going to get some wild movement Monday off of whatever Jerome Powell says. Now, I'm not going to even speculate to what he's going to say, but just, if you're trading financials, those typically are going to be the stocks that are going to move the most off of, what Jerome Powell says on Monday.
You know what this is just a general statement, but do they ever say anything really bad, on these things?
It's just, it can be. If he's hawkish, if he's saying, he's still going to be aggressive and doesn't see any reason to get more dovish. It's all about tone, right? It's the same thing with these statements. 90% of the time we know whether they're going to go up or down. It's all about the tone. When you get an interview, you're going to get a pretty good tone here, right? So, how is that tone going to be interpreted? Does he sound like he's thinking, no more interest rates here for 2019, no more interest rate hikes? Or is he sounding like, oh no, later this year we're going to be raising again? So that's going to be the question. And if he acts like he's going to raise interest rates, it's always good for the financials. And and obviously the other way if he's not. So financials are very sensitive to this.
Yeah, I think you just have to let everything shake out. Like 1 month's data, who knows? You did have the government shutdown involved in that. Who knows what the revisions are going to be? I don't think, personally, I think he's going to be dovish after this kind of number. I think it's going to continue with the dovish tone.
Yeah, and that could happen. He's going to obviously be incorporating all his thoughts from this jobs number. They'll be asking him about this. So, and the banks are saying that too this morning, Joel, that, they're going to be starting to get more dovish here because you've got the banks getting hit here this morning. But these things can change on a dime. And if he's got any type of tone that, gets interpreted as hawkishness, you could see, obviously, the banks go the other way on that. You could see some of the interest rate sensitive stuff get hit. But TLT has put together a nice 4-day run here. It's up here again this morning. Not up a lot. Maybe I would have expected TLT to be up more on this number. But you're starting to come into a wall of resistance too. If you're just looking at the TLT, that 122 is going to be huge for it.
Okay. All right, let's move on. We're way behind here. We don't have Spencer here keeping us in line here.
Let's go to ratings.
You want to skip the Smith & Wesson?
Yeah, skip those because we only have 5 minutes here. These ratings are really interesting here. And let's go to the GameStop one right off the hop. We've been fading the pops in this thing. Bank of America going to a sell on it this morning?
Bank of America on GameStop changed their rating. Neutral. They were neutral. Now they're underperformed. They lowered. Yeah, it's a sell.
They go price target?
12. $12.
What? I hate it when the analysts do this. The price target they gave, the new price target they gave was 12.
Oh, I'm sorry.
I'm going to say it's because 9. It looks like a buy because at 11.
No. I did look. I looked at prior 9.
The old price targets, the $9. You know what? I agree. I think it's going. I said this a few days ago, though, and I said this when the stock was popping on that day over $12. So that I think it's going to single digits. I still think it's going to single digits. Hate the stock.
Maybe we'll have to grab Mr. Pachter next week and then see what his opinion is on this one.
Netflix downgrade at Buckingham.
Okay.
There's a big one for you. NFLX trading down 6 points here in the pre-market. This stock's starting to look a little toppy there, too. You almost got a little head and shoulders thing happening now. We take out that neckline at 348, which we are trying to do here in the pre-market. Some work to do below. So caution in the Netflix bull.
Yeah. Just for the Smith & Wesson, just real quickly, you're trading down here. You're trading at 1050.
Talking AOBC, too.
Yeah, I just wanted to say there's a gap to fill. We were talking about this one yesterday. There's a gap fill down to 1019. That's 50 cents away. And that was from back in September. So in the lower 10s, look for a gap fill AOBC. Netflix has been sleepy as of late. Long consolidate. Now, let's see if this is the momentum to get it kicked, get it going to the downside. Just trading off the lows of the pre-market session, which is 344.55. What do I see on the dailies here? I do see a low at 44.81, but there's a little trapdoor there, folks, because your next daily low comes in at 338. That was from February 8th. So that's the Netflix one. And then we were also, we got 3 minutes here. We saw, what was the other big rating that we were talking about on the pre-market show? Etsy. Etsy gets a downgrade here from BTIG Research. Downgrades from buy to neutral. ETSY trading.
And it went parabolic there.
Sure.
And obviously it had been moving up. But then it went parabolic at the end of February, went from 55 up to 73. That's just such a huge move. So now it's correcting. Now you're getting a gap area. This thing could be back at 60. It's still got a story, though. So caution to the person who's shorting it, because this thing could just turn around on a dime there, too. So I like the Etsy story. I know valuation keeps me out of it because valuation's crazy high, but the story is still intact. And I think people will buy this on a pullback. So I think you get near 60. I think you find buyers.
64.25 was your low on earnings day. You sprinted up and made it a new all-time high at 73.35. That was actually a double top because it was flanked by a 73.33 high. So now you're kind of getting a reset here from not quite yet, but that low on that earnings day, 64.25, 60.50. Would be a gap fill on that one from the day prior to earnings that high. So that's what we're looking at for a gap fill here in this one. And I know I mentioned, Dana told me that she got all her stuff for her bridesmaids, you know, the invitation boxes.
Off Etsy?
Off Etsy. And I'm like,
that's neat. You get like homemade gifts. I said my brother-in-law sells, this wood. He's good wood in the wood shop, and he sells his stuff on there too. I mean, it's neat. It's like homemade gifts.
Yeah. Another big rating here, and let me find it. Did I see ExxonMobil on here, Dennis? I thought I did.
Yeah, ExxonMobil downgrade Cowan here this morning, so it's getting hit here too. I saw it too. I haven't went and looked it up. I just want to make sure as well. But I saw it go by my timeline.
Yeah.
Why do I not see that now?
They changed their mind?
I thought I saw it too.
I do. It got downgraded at Cowan.
There's so many headlines on ExxonMobil. You got to scroll through the bazillion headlines there to find it. Yeah, Cowan got it.
Okay. Outperformed the market performed. That was a downgrade here. This one's been a little bit of a yo-yo, but man, any way you stack it up, $80 has just been a huge level. Double top earlier in the week, 80.55, 80.40. Got hit, came all the way back up. Ran 80.26. So I guess 80 and 80.5, that's your big resistance. On the downside here, the 2-day low comes in at 77.86. That's a buck away here. So ExxonMobil kind of in the middle of nowhere, no man's land. I wish we could end the show with better news here. But
we got to go. We didn't do Tilray. We have to talk Tilray. So we're going to go long here. TLRY is probably your rating of the day. This is getting down, or this is a downgrade. No, this is initiated with a sell at Jefferies. So Tilray is down 7% here in the pre-market. And I'm trying to bring it up here. I had the report here in front of me. Tilray initiated with an underperform at Jefferies. Price target $61. But in a bearish scenario, I saw it go by. They're saying, valuation. They don't think they're as positioned as well as ACB or as CGC. In a bearish scenario, I believe they threw out a $30 potential. So the target 61, but in a bear case scenario, they were talking 30. Oh. So that's why you're seeing the stock trade down significantly here in the pre-market. And just noting, this has been one of the underperformers because the pot stocks, have all had pretty darn good January and February's. Bring up CGC. It's went from $30 to $50. It's now 40. It's come off the highs. Kronos has been straight up from $10 to 22. ACB, which is the only one I own in my long-term portfolio, it's went from 5 to 7.5. Even Afri has come back with all their stuff that's going on, and it's went from 6 to 9. And then you have Tilray that started the year at 70 and is now at 64. So this has been definitely the weakest of them all. Every time it tries to start a rally, and it did in January, had a wicked little rally for 3-4 days, but gave it all back. But this is from a relative strength perspective, this has been the weakest one.
Yeah, it has, and then you get the turn on it, and here we are going down. I'll just mention that you did have a low at 64.06. That was back in December of last year, so that was your low. We haven't quite hit it yet in the pre-market. Probably will. You're just sitting on the lows of the session, but 64 coming in as a potential support level. And one more, Frank S. Hopping in the chat here. AG, that's kind of a slower moving stock. Not sure if I see any news on it, but I see 3 highs breaking above 650. Let's see if that moves for real. Above that, you have resistance just above $7. All right. We went 2.5 minutes over here, and I want to thank Chris for coming in early, helping us out. I wish I could say that the S&P futures are starting to turn here, but they're not. 27.25 stands as your pre-market low. Don't see anything lower until the lower 2700s, but that would be another pretty good drop. I'm sure you'll get some kind of wicked rally here. I sure hope we do get to take off long hedge that I put on for the first time ever. But we will take a look at the markets on Monday morning. We got a good guest coming on Monday. Stephen Sears, who wrote for Barron's and then was not. He's back on there writing a weekly column. And I just kind of thought on Mondays, it would be good to have him maybe recap his column. He takes a look at the options market. And so we will have Stephen on Monday. Spencer will be back in his seat. Thank you all for joining us. Thanks for staying after school here, 3 minutes late. Have a great trading day. We'll be back with you on Monday morning.